Hey guys, welcome back to the channel McNallie Money, home of all things stock, investment, and personal finance related. Now for today's video, we've got a super exciting one. We're going to be talking about Q3 earnings from Tilt Holdings. So this is a penny stock involved in the MJ space in the US. It's a multi-state operator. This happens to be my largest investment, or the company I'm holding the most shares of in any of my accounts combined. So I'm super excited to talk about this one today. Before we get into it, you guys, please take a second, hit the like button. It's a huge help to both myself and the channel. If you're not already subscribed, McNallie Money, feel free to do so. And let me know in the comment section below if you're currently holding shares of Tilt, what you thought about their earnings, and in your opinion, what's holding their share price back compared to some of their peers. Now with that being said, let's get into today's video. Okay guys, so that's right. Today's video, we're going to be providing an update on Tilt Holdings. Now this has been one of my longest standing positions. I have over 20,000 shares of Tilt. I've been holding this one for a number of years. It's been pretty disappointing, to be honest. The company itself is putting up huge revenue. We're going to go through their earnings report in today's presentation. And for the life of me, I can't understand why the investment community hasn't picked up on this company. So Tilt Holdings operates in the cannabis space, specifically in the US. So they're an MSO, multi-state operator. They've got a huge operation. They just signed a really interesting or intriguing partnership in the state of New York, which we're going to talk about in today's presentation as well. But for whatever reason, you guys, this one has definitely underperformed the industry as a whole and definitely the market at large. So to kick things off here, I wanted to look at a one-year chart. Now Tilt Holdings was actually trading above 80 cents at the start of the year here, around that mid-February time period when we saw sector-wide strength in the cannabis space. Now, despite some of the legislation and advancements we've seen in government in the US recently, Tilt has pulled back substantially. It's trading now in the 40-cent range. It was actually in the high 30s a couple of weeks ago here, you guys. And again, if you look at the market cap on this company, the market cap and the share price, to me personally, really don't make sense. So if you're watching this video, feel free to leave a comment in the section below. Let me know if you have any ideas why Tilt has really underperformed other peers in the cannabis space so dramatically over the last couple of years here, you guys. Now, there is one thing I can see in the earnings report that maybe is a little bit scary or maybe seen as an issue to investors. However, for the most part, you guys, the revenue, the growth, the numbers that this company are putting up really aren't representative, in my opinion, of the market cap and the share price that Tilt Holdings currently commands. And on that note, if you look in the investor presentation on a fully diluted basis here, Tilt has about 427 million shares outstanding. So if you multiply that out by today's share price of 42 cents Canadian, I'm getting a market cap of about $179 million. Again, Canadian. If you convert that to US, you're looking at about $138 million American, which is very close to what we see here on Yahoo Finance. So again, keep that number in mind as we go through today's presentation. So the big news and really the point of today's video, you guys, is to talk about Tilt's Q3 earnings report. So you can see here record quarterly revenue of $53.4 million, which is up 37% year over year. So huge year over year growth and 10% quarter over quarter. Now the important thing to take note of here, you guys, is all the financial information or figures shown in this press release are in US dollars. So again, considering a market cap of 138 million, they put up quarterly revenue of $53.4 million. Now we're going to look at their forecast for the full year, but that to me is just astonishing for a company that has this much growth, this much top line revenue, and a market cap that's really not representative, again, of what I think the Tilt team has really put together here. So if we scroll down through the article, you can see the company has reiterated its 2021 revenue guidance of $205 to $210 million. So again, US dollars here. So what that actually means is Tilt's market cap is currently below their 1 year estimate of sales or revenue. So their market cap represents about 66% of the revenue that they're expected to bring in 2021 alone. And to me, as an investor, you guys, this is very rare to see. Sometimes you'll see companies trading at 1 times, 2 times, 3 times sales. But to see a company with a market cap of 2/3 of its estimated sales in the current fiscal year is really mind-blowing. And again, for the life of me, I can't understand why the market and the investment community has not picked up in a bigger way on Tilt Holdings. Now, they go on to mention they have revised their adjusted EBITDA forecast down slightly based on higher freight costs. So that could be seen as potentially a negative, but still super impressive here, you guys. $24 to $26 million US in-year adjusted EBITDA, representing 42 to 54% growth over last year. So again, massive growth here, you guys, that really isn't being factored into the share price. Now, in terms of the actual Q3 results, so 53.4 million, which was driven by growth in both of the company's main segments, so cannabis and inhalation and accessory. Cannabis revenue was up 19% to 11.2 million, and inhalation, which is really the Jupiter asset here, this is the bread and butter of the company, increased 42% to $42.1 million. So growth across the board, again, should be a big plus for investors. Gross profit before fair value adjustments was 12.7 million, or 23.7% of revenue. So fairly healthy gross margins. Now keep in mind, last year, gross margins were about 31.3% of revenue, so that has declined quite considerably year over year. Again, 24% is still healthy in my mind. Now again, this was impacted by higher freight costs for the inhalation business, as well as ramping up cultivation on the cannabis side of things. So these are easily explainable. Higher freight costs, shipping logistics is something that's plaguing industries around the globe right now, you guys. But this one for sure, I could see investors thinking this is definitely a short-term negative for the company. Operating expenses were 16.3 million. So they were up compared to last year, but as a percentage of revenue, OPEX or operating expenses actually improved by about 6.5%. So they represented 30.5% of revenue in Q3 of this year compared to 37% in Q3 of last year. Now, adjusted EBITDA came in virtually flat at 5 million versus 5.1. As a percentage of revenue, it did decline. So again, this could be viewed as a negative here, attributed to some of those short-term headwinds around freight and increased costs. And the final point here, this is the one that I think investors may be a little bit scared off by, is actually the cash burn. So as of September 30th, the company had $6.7 million in cash, compared to 7.4 at the end of December in 2020. So their cash position is declining slightly, but again, not anything to be worried about. They're not at a point I think they need to raise any cash at this point in time. Working capital has increased year over year, so that's healthy to see. And they have made some big announcements and moves over the last couple of quarters that's obviously going to cost or impact their cash position. So for me, the story here, you guys, is a very high growth business, top line revenue growth, but they're still working out the details around profitability, trying to get those gross margins in line with last year, and battling some increased costs related to shipping or freight and distribution. Now, in terms of the operational highlights, they received approval to commence medical retail sales at the Brockton, Massachusetts dispensary. We're going to look at some news related to that in a second here. The big partnership with the Shinnecock Indian Nation in New York, I think that one is really going to be game changer for Tilt moving forward. They've expanded their partnership with Old Pal and announced a partnership with 1906 to launch various new SKUs or products in key markets of Massachusetts, Pennsylvania, and Ohio. So again, for the life of me here, you guys, I cannot understand why Tilt Holdings is trading where it is right now in the low 40-cent range. They did have a nice run up leading into earnings, and based on this earnings release, it seems the investment community has been scared off. But when I look at Tilt compared to some of the other operators in the cannabis space or even in other sectors, you guys, the growth, the revenue, the gross margins, it all looks extremely impressive to me for a company that's ramping up to this extent, not to mention in an industry that's pending federal US legalization and is poised for extreme growth over the next couple of years. So the second article I wanted to discuss here, you guys, came out on Thursday, November 18th. This is in relation to the Brockton, Massachusetts dispensary, which we just talked about in the operational highlights there. But the thing that's super exciting about this announcement is Tilt has actually now been approved to start adult use cannabis retail operations in addition to the medical side of the business here. So effective November 22nd, the Brockton, Massachusetts location, which operates under Tilt's Commonwealth Alternative Care or CAC division, is actually going to start serving adult use customers, and they're having a kickoff celebration on Saturday, December 4th to invite the community in and really kick off this big milestone for the company. Now, speaking of Commonwealth Alternative Care, for those of you who have maybe missed my last videos on Tilt, I wanted to quickly bring this up. High-level company overview here, you guys. So Tilt's core business is really centered around that inhalation division, which is Jupiter Research. So you can see that's front and center here. They've also got Standard Farms, which is involved in the cultivation side of things. That operates in Pennsylvania. And then under the Commonwealth Alternative Care, that's what actually operates in Massachusetts. And that's their direct-to-customer or retail side of the business. Again, primarily focused on the medical side of things, but they're now branching out into adult use. So there are multiple different revenue streams here. Again, Jupiter, or the inhalation technology side of the business, is the bread and butter of this company, but they've got multiple different ways that they're generating revenue. And as we saw in that earnings release, they're seeing growth across the company in each one of these different divisions. Now, the final thing I wanted to bring up in today's video is just a reminder about this partnership in New York with the Shinnecock Indian Nation. Now, we talked about this in detail in one of my previous Tilt videos, but again, for those of you who missed it, you guys, this is really a game changer in my opinion and a first of its kind in the United States. So between this partnership, Tilt and the Shinnecock Nation, they're actually building a 60,000 square foot cultivation processing facility on the Shinnecock Nation land in New York. And in addition to that, they're going to have a 2-story dispensary with a drive-through window and wellness lounge. So again, first of its kind here, you guys, and gives them recreational access to the state of New York. Now, I think, again, this is really going to be a game changer. It drives additional revenue for the company. It's a 9-year agreement here, you guys. So for the specific terms, again, I would invite you to go take a look at that other video. This is a big development for Tilt Holdings, and it gives them access, again, to adult use market in New York, which is a huge addressable market, or TAM, for the company. So with that being said, you guys, we've talked about the earnings report. We've talked about the share price in relation to revenue. We looked at some of the recent announcements in relation to news and the partnerships going on at Tilt Holdings. Now, if those reasons weren't good enough to spark your interest or attention in this company, I wanted to end off with this slide, which are a couple more points why you may want to consider investing in Tilt Holdings. So it's an MSO, multi-state operator, again, really focused on B2B or business to business segment of the market, which I think is a very smart move as we're starting to see margins being compressed on the LP side of things, or the licensed producer / cultivator side of the industry. They've got turnkey plant touching assets, so they do have cultivation, but that's not necessarily the focus of the company. The third point here is the backbone of that inhalation industry. So Jupiter, their C-cell technology, really is best in class and extremely popular, which is driving that growth in revenue that we talked about earlier in the presentation. They're able to internally fund their growth through their cash flow and positive adjusted EBITDA. We did see the cash position decline slightly, but again, they've still got a healthy amount of cash on the books. And the fifth point is really that expansion into multiple new markets. So whether it's in Brockton, the Shinnecock Nation agreement, their expansion of their distribution rights with Aero Brands, they're really making some moves here to expand their operations and again, drive that revenue that we're starting to see flow in from the various different business units. So for those reasons, you guys, I'm super excited about this company. Again, I hold over 20,000 shares of Tilt. For the life of me, I cannot understand why this company is not trading at a much higher multiple or premium compared to some of its peers. Feel free to leave a comment in the section below. Let me know what you thought of their earnings. If there was anything that stood out to you that maybe I didn't mention. If you're still watching at this point, hopefully you found some value, so make sure you hit the like button on your way out. And if you're not already subscribed, McNallie Money, feel free to do so. Thanks again, you guys. That's all for now, and have a great rest of your day.